Good afternoon. My name is Tanya Duffy, and I've created the following presentation in order to give viewers an understanding of how Van City uses its strategic management skills to maintain its competitive advantage. Operating in British Columbia, Van City was formed in 1946 when 14 Vancouverites came together to provide financial inclusion to those who are not being served by the current financial institutions in the area. Since this time, it has grown to be Canada's largest credit union, operating 58 branches, serving close to 500,000 members. Van City is a proven innovator with a long list of firsts in the market, including lending to women without requiring a male cosigner, offering daily interest accounts, and offering its own socially responsible mutual funds. It is through innovative concepts such as these that Van City has been able to maintain its competitive advantage. While at one time credit unions were able to successfully compete based on the level of service they provided, a fast-changing external environment was eroding this advantage. Van City recognizes that their strategies cannot be static, and as such have continually focused on providing unique products and services that appeal to its membership. Currently, Van City has adopted a sustainable business model known as values-based banking that focuses on its cooperative principles, environmental sustainability, and social responsibility. As a cooperative, the organization is member-led. The board of directors is democratically elected and oversees the general direction of the credit union. These directors form committees that support them in the governance role. The president and CEO of the credit union is hired by the board of directors and is responsible for the management and day-to-day leadership of the organization. As a member-owned organization, meeting member needs is a critical function of the organization. In order to ensure inclusiveness, Van City takes a proactive approach through the use of surveys, focus groups, discussion panels, social media, as well as encouraging participation at the annual general meeting. The use of a five forces competitive model illustrates the factors that impact Van City's ability to compete in the financial services industry. The threat of new entrants is low. Economies of scale are relatively small for credit unions, as they operate as autonomous organizations. Stringent regulations are in place in terms of capital and liquidity levels, operational policies, and government reporting requirements. Additionally, Van City offers differentiated products and has high customer loyalty. The threat of substitutes is high. There are many competing organizations, including banks, trust companies, insurance companies, brokerage firms, retail credit cards, and payday loan companies. Switching costs exist for members for items such as new debit cards and pre-authorized payment changes. However, in today's highly competitive market, more firms are willing to offer incentives and ease of transfer in order to capture the client's wallet share. For Van City, the power of its buyers, its members, is high. Each member is equal in power. Core products can be obtained through one of the many competitors. Buyers are becoming more sophisticated, and their needs are changing, demanding improved products and services with increased convenience. Supplier power is high. Van City uses its members' money to invest in and fund projects. If members decide to switch to another institution, then Van City will have less capital in which to operate. Industry rivalry is moderate to high for credit unions. They do not compete with each other for customers and revenues in the traditional sense. Their biggest competition are the big six charter banks, with a volatile economy that is slowly recovering from the recent economic crisis. Competition among competitors is high. While Van City is the largest credit union in Canada, based on asset size, this graph is useful to show how they stack up in size next to their biggest competitors. While this seems overwhelming, through its dynamic competitive advantages, Van City has been able to continue to grow its assets and increase its market share. The use of a BCG growth matrix is helpful in illustrating the competitive position of Van City's lending product offerings. From this matrix, we can see that the commercial portfolio and residential mortgages are stars, while the personal loans are cash cows. For Van City's commercial portfolio, this may be attributed to its promotion of small business financing and its brand strategy, coupled with a proliferating small business industry. Residential mortgages are operating in an industry that, while plagued with slumping home valuations, have also seen all-time low interest rates that promote home ownership and refinancing for an equity takeout. Personal loans fall into the cash cow quadrant of the matrix, and this may be attributed to the traditional ways in which a credit union operates as opposed to the major banks. They have a willingness to make smaller loans if it meets the needs of the member, rather than imposing larger minimum borrowings or offering a credit card. Van City's value proposition seeks to add positive impacts to members' lives and communities. Their brand, Make Good Money, is focused on putting money to good by listening and responding to members' needs and fostering sustainable growth that improves members' well-being. This strategy is built upon the cooperative principles for which the credit union was formed, a concerted effort to protect the environment. Van City has been carbon neutral since 2008 and offers members incentives such as low interest rates on loans to purchase clean air autos or improve energy efficiency in their home, and providing social justice and financial inclusion for all. By redefining wealth in these terms, Van City uses that money that members entrust with them to create positive impact loans that support the local economy, such as buying homes, growing local businesses, and providing financial literacy. When members choose to be a part of Van City, they know they are a part of an organization that is working to enrich their lives and community. Like any organization, Van City has strong and weak points, as well as opportunities where they can advance and factors that threaten to harm their existence. It is how they choose to use these factors to strategically place themselves in the market that matters most. To use its strengths and opportunities, Van City could promote its triple bottom line approach to attract young members, use their proficiency in the small business product segment to capitalize on this sector of the economy, and use its innovation status to develop products and services that will attract young members. To overcome weaknesses using opportunities, Van City could merge with other credit unions to increase economies of scale for such items as technological upgrades, promote wealth management services that appeal to the aging membership, and as the sector grows, attract members that will utilize more services, increasing the wallet share and offsetting low margins. Threats could potentially be offset by its strengths through using its diversity and innovation to exceed members' expectations and gain market share from the competition, as well as appeal to the changing demographics in its potential market base. They could also call on their employees to ensure that reporting regulations are met. In an effort to offset threats and weaknesses, Van City should consider the following. While they operate in a volatile market that is impacted by global conditions, risk should be mitigated through prudent lending practices that will allow for stronger margins. As members age and they begin to transfer their wealth, strive to keep it at the credit union, which will help with capital and liquidity requirements. While it is evident that Van City has an effective business strategy with a differentiated competitive advantage, there are two recommendations that I would offer. The first would be to develop and implement a strategy to economically keep pace with the changing face of technology. As lifestyles change and more emphasis is placed on convenience, Van City will need to be able to offer these services. This will require their continued innovative ideals and perhaps a collaboration with other credit unions. The other area where I believe Van City should look towards is attracting young members to become a part of their movement. As people move through their financial life cycles, it is imperative that Van City attracts the younger generation, those who will be buying cars, building homes, and investing in their future. By offering a differentiated way to do banking, Van City has continually worked towards adding value to people's lives and in the process positioned themselves as a key player in the finance industry. I leave you with a short video that highlights the results and impacts of what is possible when members choose to belong to and invest with Van City.
As a cooperative, we use our financial tools to create positive outcomes for our members and communities. It's the Van City effect. In 2012, our assets totaled $17.1 billion, up $900 million from the previous year. We used some of this money to help 5,800 people attend financial literacy seminars and build 619 units of affordable housing. These are examples of how we use credit, grants, and shared profits to help our members and communities thrive. We share 30% of our net earnings with members and the community. In 2012, we shared $17.2 million. Our members' deposits funded $386 million in community impact loans, which demonstrate positive social, economic, and, of course, environmental impact. We also minimize the environmental impact of our operations. Aon Hewitt named Van City one of Canada's Green 30. We are a certified living wage employer, and we're working with 43 suppliers to encourage them to pay a living wage. A living wage allows a family of 4 in Metro Vancouver to meet their basic needs. Our 2,500 employees rewarded us with a Best in-Class Employee Engagement score of 76%, and we were named one of the 50 best employers in Canada. Our expenses increased through our investments in employee training, new technology, and member service, and our investments are paying off. Our members gave us strong service scores, and our Good Money brand attracted over 12,000 new members. We're one of the 50 best corporate citizens in Canada, an honor our nearly 500,000 members can be proud of. Thank you from all of us at Van City.